Hello, everybody. Let's see how we're doing. How are you guys doing? Say hello in the chat when you get a chance. We would love to see you and hear more about what you do. We're just gonna give everybody a few minutes to join us. Obviously, we're not gonna start right on the dot. Give our late runners, some time to get a cup of coffee, finish their lunch, things like that. Hello, Cynthia, Meg, Susan from Seattle.
Love it.
We got some people from Massachusetts in here. Thank you guys so much for joining us this afternoon. We're super, super excited to have you. And please introduce yourself in the chat as you guys are doing already. But tell us more about your organization, your nonprofit, what you guys do. We want to get to know you. Mm-hmm. Hello, Adam. I always feel like I'm doing like one of those Facebook lives like influencers used to do in like 2016, like communicating with the people, being like, hey. Teaching artist, Fred, lovely. Ooh, south of Napa, lovely. So hope you're having good weather, better weather than I'm having here in Virginia. And you are, Tasha, hopefully.
Yes. And even if not, I mean,
yeah,
bad weather in Napa is better than, good weather somewhere else, maybe.
At least there's good wine to drink to soothe your sorrows. Hello, Sylvia. Amazing. Susan, the Financial Services Program Manager. Wonderful. Lovely to have you. Adam, okay, you're an accountant looking to better serve your nonprofit clients. That's great. Welcome. We're happy to have you. It's very important. All right. Okay, you work with veterans, elders, homeless. Wonderful. 100% community funded. Congratulations. That's wonderful. Wow. It's so nice to meet all of you guys. We're just going to give it 1 or 2 more minutes.
Lots of different missions. I love it.
Yeah.
And different people. We have got some accountants, some non-accountants on here.
Absolutely. Erin's a freelance bookkeeper.
Love it.
Oh, you just took on your first nonprofit. How exciting. And D, yes, the video will be available for download afterward. Everyone who is present and who has signed up and registered, even if they're not present today, will get all of the slides and the replay by email. If not a few hours afterward, maybe tomorrow. Mm-hmm. Business administrator for a church, Kelly. Wonderful.
I love knowing the audience, Trish, because if we're talking to non-accountants that are just getting introduced to this, the conversation is a little different than those that might have a little understanding of accounting. So hopefully we'll have some good stuff for everybody.
Absolutely. Right. All right. Well, why don't we just go ahead and get started, and everyone can filter in as they come in. And we are happy to have you guys here. So let's jump right in. So let us know, we are here. You guys can see us, hear us. Make sure that at any point, if something goes wrong technically, then we're not able to see it, just flag us in the chat, right? In all caps, be like, help, SOS, we can't hear you or see you. We do have our colleague Valeria online with us as well, just in case we have any technical difficulties. And be sure, again, to keep telling us what you guys do, who you are, so we can, get to know who our audience is. And we're really happy to have you. So we will be together for about 45 minutes. And so hello to everyone here and everyone who's watching us on a replay afterward. We are glad that you're here. So before we begin, just some good housekeeping to get out of the way, but while we wait for everybody to join us, make sure that you guys silence your notifications. There's a little bell at the top of your chat that you guys can silence as well, so you're not getting pinged constantly. Mm-hmm. And any other notifications that you have as well. I have silenced my Slack for this, for this meeting, which is a very big deal for me. So yes. So make sure that you guys are using the chat for interactions, comments, reactions, and the topics that you guys want to discuss between you guys. But if you do have questions, be sure to use the questions tab that is dedicated to this kind of system. So at the bottom of your chat, you'll see a little question mark that says questions. And what's great about this is that, you can vote for the most popular questions or the questions that you really want answered, which is going to be super helpful for us. As we may have lots of questions filter in, which we will answer right at the end, but we are going to answer the most popular questions first, just to make sure that we get, to the most popular topics. Mm-hmm. So, as I mentioned, we are, many people here with us this afternoon. We're about 60 right now, hopefully more to come. But we're only 2 of us, myself and Tasha. So we will prioritize to answer the questions that you need answers to most. Okay. Good. Great.
Good.
So,
yeah.
Just make sure that you stay until the end. We have a little gift for one lucky winner. So this is not just for everyone who's watching us live, but for everyone on the replay as well. So make sure you stay to the end to find out what it is and how to enter, because it is very good and you're gonna want it. So that being said, who are we? So Tasha, would you like to introduce yourself?
Sure. So I'm Tasha Anderson. I am the founder and managing partner of a boutique accounting firm working exclusively with nonprofits. I've started this company about 7 years ago. But before that, I was actually an auditor. I worked in nonprofit auditing, and I made sure all the I's were dotted and T's crossed with our organizations, especially in light of government funding. So think of kind of really complex stuff. So I was a financial statement auditor. I would come in at the end of the year, make sure that everything was done correctly. So I did that for about 7 years. I left that post, took a CFO position at a nonprofit, did that for about 4 years. So I really got a deep dive into the operational needs of a nonprofit organization. And then interestingly, blending the worlds of what is practical and capable for me to do from an administrative capacity standpoint, as well as the team that I worked with. And then what does the outside world want from us in terms of compliance, best practices, those sort of things, and how do we blend those 2 things together to make it more sustainable? So with my firm, what we hope to do is just offer kind of that blend of both financial savviness and providing that CFO financial thought leadership for our nonprofit organizations that might be too big, where they couldn't get by with basic, bookkeeping and basic reports. They need something more, but they're maybe not quite at a size where they need a full accounting department in-house. So, and then of course, through the lens, while we don't offer back office support for all functions of a nonprofit, we do try to take that into consideration when we're building out kind of how we navigate the work and how we respond to the stakeholders. So that in a nutshell is what we do. So we're, excited to be here.
Thank you so much, Tasha. And for me, my name is Trish. Hi, I am the growth manager for Springly, and Springly is in the charity CFO are co-hosting this event together. I'm sorry, my brain is moving too fast in my mouth. Springly is an all-in-one software to help your nonprofit spend more time on your mission and less time on any administrative tasks that you guys have. So our goal is to help the people who help people. And Springly has been involved in creating content for nonprofit organizations for as long as I can remember. And we are here to kind of bring the method and the tool that you need to execute it. So saving time, automating tasks, making sure that you have all of the tools that you need in one place to help grow and streamline your organization. So we are happy to be here. And so how do we know each other is the real deal. It's the real question. So I like to call us a dream team. Tasha and I have been working together since I think early 2022 by this time. So almost a little over a year by now. And our goal is to work together to not to present only the theories of accounting, but follow up with tips and actionable steps for everyone from non-accountants to professional CPAs, making sure that you guys have all of the tools that you need. You have your accountant expert here and the people that can help you create a method to the madness, I guess. And together, I think we make the perfect pair to help nonprofits with accounting. And we have actually produced a wonderful resource that we will talk about a little bit later, a little bit of teasing there for you together to help you guys have the basics of what nonprofit accounting looks like. So that being said, should we get started? Are we excited? Let's get some celebration in the chat. Let's get some movement going. And that being said, let's get started. So what is fund accounting? Why are we here? Why are we here together? Oh, Damaris, thank you so much for saying that you're ready. We're ready too. So what is fund accounting? Why are we here together? Why are we here for this next 45 minutes? And it kind of all breaks down, into, you guys can see the breakdown, the 3 different things, right? Where you got it. We're here on the slide. Thank you. Thank you. So here's what we're going to cover today. The three different aspects of fund accounting that we're going to look at is we're going to look at the overview of fund accounting, so the basics of what it looks like, why it's important for your organization, and the kind of the details of what are net assets with and without donor restrictions with, again, correct me, Tasha, if I'm wrong, which is a huge part of what fund accounting is.
Exactly.
Great. And at the end, we are going to kind of use a real life example to help, again, put the method to the madness and practice everything that we've learned. And that being said, let's get into it. So what is fund accounting? So again, Tasha's our expert here. So I'm going to kind of give a general overview, and she's going to be able to get into all of the details. So fund accounting, the ultimate goal really of it all is to allocate the resources in a way that results in as much, general accounting. We're talking about general accounting. The ultimate goal is to allocate the resources in a way that results in as much profit as possible by the end of the fiscal year. Correct?
Absolutely. So general accounting, I mean, there's all kinds of different words that we use for accounting. And let's just kind of clarify a few things real quick. Now, fund accounting is a type of accounting, and there are a couple of regulatory bodies that say how we're supposed to do accounting, whether it's for-profit or nonprofit. I call it kind of the accounting gods. It's some combination of Financial Accounting Standards Board here if you're in the US. So it's US GAAP. And that's just kind of like the blanket rules. The IRS also has some rules, but we're not going to focus so much on the IRS right now. We're talking about US generally accepted accounting principles. Fund accounting is really just a system for tracking kind of subcomponents of the resources that you bring into your organization. Now, to your point, Trish, general accounting, it could be used by nonprofits if they don't require fund accounting. We'll talk about that. But let's, for all intents and purposes, assume that the overwhelming majority of nonprofits either currently should be using fund accounting, or they either are or they should be, and maybe they don't have restricted gifts that they have to track right now. They will likely want to set up a good system that when they do get a restricted gift, they're not going and re-engineering their entire accounting system to go back and be able to have the capability to do that. So for simplicity's sake, let's talk a little bit more about general accounting. This is more often used by for-profit businesses, or again, businesses that are not mandated to keep track of, hey, I received, sales for $10. I deposited $10 in my bank account, and I'm going to have to account to someone exactly how that $10 was spent. That's what we're talking about with fund accounting here. So to your point, Trish, a lot of the difference with, for-profit and nonprofit businesses in a nutshell, which we'll talk about on the next slide with an example, is that for-profit businesses or general accounting, they could earn all the money they want and they could spend that money however they want, right? As a for-profit business, for me, if I wanted to go out and sell a bunch of services and I wanted to reinvest some of that money into salaries, and I want to invest in a new initiative with marketing, and you know what, Tasha just wants a new boat, and so I'm just going to make a distribution and I'm just going to go buy a boat, I could do that, and no one really holds me accountable for that.
A very reasonable purchase.
Yeah, very reasonable, sensible purchase, like a new boat, right? In a very landlocked city of St. Louis that I'm in, maybe not the best investment. However, in the nonprofit world, it's not that simple. And we kind of have to anticipate how are all of the different ways that people are going to ask me how to spend this money. So that kind of in a high level, kind of comparing the two. But just know that general accounting rather, like I said, your business, you could bring in all of the money, deposit into your bank account. You can spend it at your leisure, however you want, more or less. That's most for-profit businesses. Most nonprofits, maybe they get a lot of crowdsourcing. They get a lot of general donations. People are just supporting your mission at a very high level. They don't really care so much how you spend it on what line items of expenses. You could also be an organization maybe that does a lot of, maybe you sell your products, right? Maybe you are an animal shelter and a lot of your revenue is driven off of adoption fees and veterinary services, and no one's policing that you spent too much on animal medication and you spent too much on staff. No one's really policing that because people are contributing to a greater fund, or the general fund, general accounting, right? This is much different than if you're an organization that has a lot of, individual grants you have to keep account for. So just kind of think about that from a difference. So general accounting, we're not going to talk so much about going forward, but just to clarify what I mean by that and just think about general accounting as essentially all of the other businesses that don't have to report on how they spend every dollar, which is a lot more work and kind of a struggle for some of us, but hopefully will help you come up with some tools and tricks on how to set your organization up for that. So I guess I just kind of think about businesses, they can spend it however they want. So that's general accounting kind of in a nutshell.
Right.
Yeah.
And so to clarify that with this example is basically exactly what you said, is that we want to, any other business that doesn't have to have this amount of transparency or even accountability can reinvest their profits into things like marketing, R&D, profit distribution, like you have here on the screen.
Exactly. So, in the nonprofit world, of course, you can't do a profit distribution and you can't go buy a boat. In that example, that's the difference between the for-profit and the nonprofit world. But the nonprofit world, to your point, Trish, you could save that money and build a reserve. You could reinvest that into any other kind of expense within the organization without anyone being too particular about that. Of course, you have your board and all that, but we're talking about donor restrictions specifically. You're not going to upset a donor by spending too much on, staff benefits when you were supposed to send it on program supplies or something like that. So
Totally. So if we can look deeper into that, now that we have a general understanding of what general accounting is, when we look at fund accounting, basically, from what I understand, the ultimate goal is to redirect funds to help further the mission in your nonprofit.
Yeah. It makes it much easier to, I think, sell the organization. And I know that's maybe kind of a weird word to use when we talk about nonprofits, but let me explain. Fund accounting, too, just want to clarify, I think that word is a little broadly used, and I'll kind of elaborate on the way that I think about it. Some organizations might classify their funds by departments. So more commonly, nonprofits have to track by at a minimum, kind of 3 different categories. Number one, programmatic. How many dollars do you spend on direct program offerings, right? These are the ratios that we get hung up on, especially in the US and in the nonprofit world. Also, how much did you spend on fundraising? How much did you spend on administrative costs? So those are kind of 3 buckets that you want to keep track of. And that is maybe what some people would define as funds, but I want to take it a step further. A fund could also be anything that your organization kind of defines as earmarked money. It could be earmarked because your board has designated as such. For example, I have a client who has kind of a special fund that they earmark each year for capital improvements on their building or replacement of equipment. Some funds might be donor restricted. So we're going to call a fund, XYZ Foundation, gift for 2023, for example. That could be a fund. So it's just another dimension. And we'll kind of give more of a visual about these dimensions we're talking about later. But it allows you to be able to essentially track the way you spend your money in a variety of different ways so that when you do need to sell the organization, you can pull the reporting in a meaningful way. And what do I mean by that? If you have a donor that said, hey, we really want to support this cause within your organization, tell us how much you need for that particular initiative. Maybe you can run a report by your program, just your program expenses. And you could say, we need X amount of dollars for program supplies. Or alternatively, if you have a funder that said, hey, I gave you $10,000, how did you spend that money this year? You could say, hey, we ended up spending it on this, but we actually didn't have enough. Would you consider supporting us in a bigger, more meaningful way next year? Something to that effect. So being able to track the way you spend your money by all of these different dimensions, if you will, allow you to pull different reports kind of in a meaningful way and respond to various stakeholders, if you will, whether it's donors, board members, or internal team members even. Could be grant applications. There's all different ways that you can kind of pull this information. But anyway, so that's fund accounting. I just want to clarify what we mean by fund accounting. Some people think of truly different buckets, departments. Some people think about it for purpose. Some people think of funds as maybe time restrictions. Some think of it as an endowment. So there's no definitive right, wrong definition in my world. In a more practical sense, people can use that terminology in a bunch of different ways. But just think about if we need to track a certain amount of dollars that was provided to us, given to us, and we need to track that way of spending, you might want to consider that a fund. Now, that does not necessarily mean it's in a separate bank account, right? It's
Mhm.
just another little field that you usually input into your accounting system to be able to run reports off of, and just kind of conceptually how you think about those dollars. So
Yeah, that it's much more clear when you think about it that way. When we try not to get tripped up on that terminology of like, okay, what is an actual fund and why do we call it fund accounting? That it's more clear when we have an idea of what that actually means.
yeah, and sometimes too, thinking about funds, it's not just nonprofit organizations that use funds. Government uses the word funds a lot. They have like their general fund, and then they'll have, maybe their different initiatives or programs or causes or whatever it is they're supporting. That could be used as a fund. And sometimes funds are, X amount of dollars earmarked for 1 year, and then you spend those funds, and it's a use it or lose it. It
Right.
doesn't continue on. And in some funds, and the way we're going to be talking about it today, which I think creates a super tricky situation, is in the case of this example, where you have
Mhm.
funds maybe that come in 1 year and you deposit into your bank account and you're spending it over time. And it could cross budget periods, it could cross fiscal years. So in our example here, a nonprofit could have a budget for a certain project. This happens all the time. Say you get a check in December, and it's to spend over the next calendar year for the programming that maybe you wrote the grant application for. So we know that we have to earmark that money, we have to account for that money, but things get a little tricky, and we'll kind of demystify a little bit of that here in a little bit. But unlike other businesses, we shouldn't be using that $10,000 for other causes outside of those funds. Now, I'm going to say this in a practical sense, how people do it. They take all their money, they deposit it into one bank account, more or less. Then they will spend all of the money out of the same bank account. But your accountant is able to say, of that money sitting in the bank account, we feel confident that the balance also includes the money we still need to spend at a later point in time. I have seen some organizations that collected restricted dollars, say they have accumulated several grants, and they essentially owe to the public services that equal $50,000. But maybe their bank account only has $30,000 in it. That's a problem, right? That means we have spent those restricted monies for other purposes. Now, in the US, is that illegal? No. Is it best practices? Definitely not. Would you disclose that? Would you be in problems with your funders? Would you have some really tough conversations if people found out you were operating in that way? Absolutely. So the key is to be able to track how much of these restricted funds do you have at any given point, and are you overspending or underspending in different areas, just so you can kind of speak confidently about that.
Right.
So we'll talk a little bit more about that. I always, just want people to be careful about what I call kind of rob Peter to pay Paul kind of mindset, making sure that if I've made all these commitments to all these different people, that I feel good that the money is still in my bank account, and when I actually have to deliver those services or whatever it might be, that I'm spending it in accordance with the donor. The donor's wishes. And where things get tricky, most nonprofits, especially smaller organizations, don't have a good system for tracking these things. And I'll be honest, Trish and I, you and I were chatting the other day. Most
Yep.
organizations have no idea where they're actually at any point in time. And it's not
Absolutely.
like they're doing it in a malicious fraudster way.
Absolutely not. Yeah.
It's just a lack of a system of tracking an organization. So that's what we're hoping to have prevented here.
And you bring up a great point,
Yep.
Tasha, if I can interject, is that, a little bit later in this webinar, we're going to be talking about why fund accounting is important for nonprofits. And we'll touch on this a little bit later, but it's introducing this idea of accountability and transparency and donor trust. And I think that even though something isn't illegal, you brought up that really excellent point of being like, how do we explain it, right?
Yeah.
And I think that that's a great, it's a great indicator of what we're going to talk about a little bit later. So absolutely.
Yeah. I don't think people really ever look at it that way, but I've not ever heard anybody get in, legal trouble for it. However, I have seen people run out of money before they're actually able to deliver on their commitments to their funders, and their funders are not going to fund them again because they've just not been able to kind of manage. And I would say this whole idea of fund accounting and restricted funds and how it's recorded and how it's spent and how it shows up in the budget is single-handedly, I think, the biggest point of confusion for people both running organizations to boards that are providing governance for organizations, for donors, understanding financial reports, frankly, for accountants on how to communicate it and how to present it is a bit challenging. So hopefully we can, if nothing else, validate you all. Hopefully we'll have practical tips on how to, provide some visuals or at least have those conversations with people. But if nothing else, create some validation. So
absolutely.
To further compound part of the confusion, is this point in which we receive revenue and when we spend it, right? And this is what I was kind of alluding to with it being the biggest source of confusion, especially for me as a CFO for a couple hundred organizations now, having these conversations with the board, because in the financial reports, going again to the financial rules and the accounting rules and all that, we have to record the revenue when it is either received or when it is pledged. Maybe we don't even receive the money, but when the commitment is made, according to the United States generally accepted accounting principles rules, I call it kind of the accounting gods, if you will, in all of their rules that they give us, they say that it has very specific revenue recognition requirements. So your organization will likely have to record revenue before it's spent, or sometimes even before it's received, right? Maybe you have a pledge of $25,000, but you have for a program, and you're going to front load some of those expenses, and then that grantor is going to give you a check, 3 months later. So you have revenue reported in one period, and in some cases you might have expenses reported in another period. So that's a big challenge, not just from a fund balance. It's like, Tasha, I have a fund balance on funds that I've never even received. I know. Welcome to the nonprofit world. I don't know what to say. I don't make the rules. I just try to interpret them. So kind of keep that in mind, and we're going to talk a little bit more about how to have those conversations with your board kind of through these next slides. Okay, so lots of numbers, lots of words. I don't want anyone to panic yet for the non-accounting folks, but I really want to make
if I can understand it, they can. Listen,
it looks
you
explained
this to me very well.
It looks a little overwhelming, but one thing that I want to also demystify a little bit, that I've had so many conversations, especially with directors of development, where they say, Tasha, but I raised that money last year, but we're spending it this year, but on my budget or on these financial reports into this new year when we're going to start spending these dollars that are restricted, it's not showing up on my budget, even though I earned this money last year. I said, I know. Okay, I didn't write the rules. I just have to provide the reports. So just keep in mind that your revenue that you received in a prior year cannot be counted as revenue in another year, right? You can't double count revenue. So I kind of provided this, visual. Now, this is actually out of an audited financial statement. This doesn't necessarily mean your financial reports have to look this way. Every organization probably has presentations that are completely different and unique to them because that's the most meaningful illustration for themselves. But I want to kind of show you more of a visual on what this looks like for those that are struggling with a bit of the releases of these restrictions in the fund accounting. So just kind of think that if you receive funds in one year, you spend them down in the next year, you're going to have expenses in the year you spend them, but you're not going to have that revenue. And this is the point of confusion for boards, sometimes for leaders of organizations. And we have some more slides, but I'm going to start just kind of getting through this. But really what it is you get the funds, you deposit in your bank account, and it parks there until the time in which you need to spend it. And then when you spend it, you're not actually acknowledging more revenue. You're not recording more revenue. You're just spending down the bank balance that you have. And so here I want to give a little bit of a visual. You'll notice that we break down in the...
Excuse me, sorry.
No worries.
Got trigger happy.
Lots of, go back to some of the numbers. You'll notice a couple columns here. So these, in this particular example, you'll see this organization has lots of different sources of funding, right? And they have donations without donor restrictions. So that's easy. And then we have some that are with donor restrictions, right, on any given year. If you go down to the very bottom, though, where it says net assets released from restrictions, this is where, most importantly, I want to call to attention under the total column, it's zero, which basically means we're acknowledging, we're giving you an illustration that we spent down $545,000 of restricted funds this year. But notice on the total column, it says zero. Why is that the case? because you can't double count the revenue. Like that revenue was already acknowledged in prior periods, or it was acknowledged on the upper section there. You just can't double count it. And I want to call that attention because that is a source of confusion for people. If you receive it in a prior period, you can't count it again. But what you can do is you can keep track of it and you can communicate to your board, hey, we're going to have to put these expenses in this budget this year, but the revenue was recorded last year. We all have to be okay with that, even if that means that our revenue is less than our expenses because we're spending down that bank account. Okay, so hopefully that makes sense. It's kind of a complicated thing.
Yeah, because this can be very difficult to explain to higher ups. Maybe we don't have necessarily the same vernacular, vocabulary, etc. It can be. I can imagine that is very challenging for people coming to their financial committee or their boards, being like, "We have this, but we can't use it right now, but we will use it later, etc." I can imagine that that's a very challenging conversation.
Exactly. And one more thing before we move on from this slide. So notice in the middle column, halfway through that little illustration here, it says $252,000. That is the amount of restricted gifts that you would argue would go into your fund accounting that we received in that given year. But notice right below that where it says 545,000, that shows how many restricted gifts did we spend in that year. Notice those are not the same. So we got $252,000 of restricted gifts. We spent $545,000 of restricted gifts. So you have to ask yourself, well, those aren't the same. So that means the difference, that $293,000, that was actually money we collected in prior year, right? So this is what I mean by accumulating to your bank account, spending it down, and that is a point of confusion for people. So funders, board members, management teams, they just need to understand, just because we're very repetitive, but just because we recorded it last year, it doesn't necessarily mean it's going to show up, not necessarily, it will not show up as revenue on this year. It will give you an illustration through this little line item transfer. We call this a transfer from one fund to the other fund. It's just like in your personal life. If you were transferring money from your savings account to your checking account, you didn't earn any new money this year. You just moved it from one bank account to the other. I wish that was the way it worked, but it doesn't, right? Unfortunately. Okay.
I think this is super helpful as well for all of the people that have joined us who are accountants, who are working with their first nonprofits, who are wanting to move into work with nonprofits. This is a great way to explain how fund accounting works to your clients who may not have the education or the same vocabulary to be able to explain that to their boards or financial committees. So Thanks for all of that.
Yes.
So this may be a little visual that can help all of our visual learners, as I am as well. So basically kind of a visual difference between what general accounting and fund accounting looks like. Obviously the funds can be called different things, different names, but money going in and out of each fund, correct?
Exactly. And so kind of like what we talked about before, funds could be a variety of different things. It could be, in this case, like a facility fund, or what I was talking about, capital improvements, kind of earmarking some money. And that may not necessarily be a donor. It could be your board or your management team decided to kind of set up that separate fund, or it could be driven by grants. And so money typically goes into the general fund and then it's kind of dispersed out to the other funds. And again, I just want to clarify that funds that we're talking about are not necessarily different bank accounts. So please, for all of you that are not accountants, do not force your accountant to go out and get 30 different bank accounts. That would be a nightmare. There's accounting systems that allow you to track that. I know there's some questions that are coming through on, do different systems have the capability to track this? There are systems to do that, or a lot of accountants just use an Excel spreadsheet to track these things and leverage a couple reports within their accounting system to track it manually. So that's, to your point, more visual, and just kind of think that the word fund can be a broad term that you can kind of define internally.
Great. Do we have any questions so far? I know this was a lot of information. You guys are doing such a great job, and Tasha, you're doing an excellent job of explaining things in a very clear and concise way. So just a reminder that if you do have questions, I'm sure you do, so please ask them in the questions tab. We will get to them right at the end. So now that we've kind of gone through the basics, we have a general understanding of what the differences between general and fund accounting are. I think it's time to talk about why it's important. Outside of the fact that it's kind of a standard for nonprofits, that should be a standard, we mentioned something on the previous slides and that we talked about just a little bit earlier about what the main reason is that nonprofits need to be taking this subject pretty seriously. And if you can remember what it is, I would love for you to write it in the chat, get a little movement in the chat going. And as you, there's a little, hint in in the GIF or GIF, however you say it. And yes, accountability, transparency. You either, Gabrielle and you are 100% correct. Proper fund accounting breeds trust internally, externally, and externally because you're showing donors that you're properly using their funds. And trust, as we know, is everything in the donor-funder relationship. Internally, it organizes your funds in a really logical way that's adapted to your nonprofit-specific needs and gives you a really clear picture of your financial health. So obviously, we want to make sure that we are building this sensation of trust between all of those people that do decide to fund and give gifts to your organization, whether they're restricted or unrestricted. Being accountable and transparent is a core value for many nonprofit organizations, for all nonprofit organizations. And making sure that we're using those funds the way that they were asked to be used is very, very important. Obviously, because not just because you've been asked to, but because you want to make sure you build that relationship that they keep funding you again and again. Exactly.
Yeah, I'll add to that, Trish, if I can. More shameless plugging for fund accounting. It is much more complicated. It is much more detailed. I like to joke, in another life, I'm going to pick a much easier niche with much less compliance and tracking, maybe something much simpler. But fund accounting is also important because your auditors might require it. And if I can, just give a brief little case study for this. It was an example that happened yesterday for me. I have a client that has a grant, and it's like about $100,000, and it's broken out into different line items. So salaries, benefits for that employee, some program supplies, and a couple other line items, right? And it's interesting, the program or the project ends June 30th. So we have been able to, every time we're spending dollars, we tag it to the appropriate fund. In this case, it's a grant fund, right? And I was noticing back in April that we are kind of trending behind schedule on spending down that grant. So I had shared with a client back in the end of April, hey, just so you know, we've got this grant that's going to be ending in June. We don't want to get to the end of June, or even worse, July 1st or beyond July 1st, when it's too late to go back and spend money. Hey, we're trending behind budget. And just so you all know, we might want to be intentional about spending the rest of the grant, especially if it's program supplies. We just probably haven't made purchases yet or something like that. Or
put the order in, or
maybe the purchase was made and for whatever reason, the purchase of the supplies was not communicated. Hey, Tasha, that's actually for this grant. Make sure you tag it to that or whatever. Those things happen all the time. But it's just a really good tool for that particular CEO to know, oh, wow, like I have another $15,000 I need to spend on program supplies, and there's no shortage of need for program supplies. And if I would have waited until after July, when I have to send my final report to the funder, I would have realized after the fact that I didn't spend down all of the money. So I left money on the table for the organization.
Yeah.
Well, fund accounting is really good. Number one, your auditors will require it or ask a lot of questions of fund accounting. Will make it much easier to comply with their request. And number two, a management tool to help you manage the spending of those grants and make sure that you're getting every dollar that's already been promised to you and that your donor wants to support you in that way. So
absolutely. I've seen this before. I used to work for a very large foundation for a large technology defense company, and we had the same issue, is that we didn't use all the funding that was given to us. And even though we would continue to be funded by the same organization the next year, they funded us less because we weren't able to have a clear vision of how much we were spending and at what time through what fund. And so they were like, we're happy to fund you again, but you didn't use all of the funds that we gave you last year, so we're going to give you less this year because you didn't use it. And we see that all the time. And I think having that fund accounting and having, the very clear understanding of what you need to be spending and when is a great way to make sure that you're not only keeping the same funder, but you're keeping the same amount of funding as well.
Exactly. Demonstrating that need. And especially if you're running out of funding. I've had situations where, hey, we're spending it faster than we thought. We were able to go back to the donor and like, great, I would love to support you more. And they give us additional funding. So it's a great management tool.
Absolutely. Okay, so the last thing that we're going to talk about kind of before we get into our case study is net assets with and without donor restrictions, previously called restricted or unrestricted funds. And so there are two main distinctions in fund accounting that don't exist in traditional accounting, which is the idea of funds with and without restrictions. So without funds without donor restrictions, again, Tasha, jump in and correct me if I'm wrong, but that is money that is given to your organization that is freely with no restrictions, no specifications of how it should be used. Basically,
Right.
for example, let's say you get a $5,000 donation that's unrestricted. You can use it for anything like office supplies or salaries or HR costs.
Yep, exactly.
And as you, fantastic. I love being right about these things. And so I guess net assets with donor restrictions is the complete opposite, right? So it's when funds come into your organization that with a predetermined purpose for whatever it is. If we go back to our previous example with the $5,000 that you get a grant for, but it's only allowed to be used to finance your project on providing, let's say, stable employment for veterans. It's really important to remember that restrictions that you have to use that fund for that specific purpose. And that, again, correct me if I'm wrong, Tasha, but the restrictions stay in place until the donation is completely gone. Is that correct?
Yep. Until they exhaust all those funds. Absolutely.
Right. Okay. So are restricted and unrestricted funds clear for everybody in the chat? Make sure you're asking your questions about that. It's a pretty clear cut, straightforward, piece of information, but you never know.
I do want to add to that, Trish. Sometimes I think people get a little confused with restricted funds. Technically, accounting God rules again. The restrictions can only be received from donors. Now, that said, there are sometimes what they call board restricted funds. Like I was using the example of like the capital improvement fund that my client likes to put together. So boards can certainly put their own requirements, but really they're not actually restricted. And so if you were to do a financial report or your 990, for example, it would not show up as restricted, even though you all might think about it internally. But yeah, these are donor restricted. And in the past, it used to be unrestricted, which is, what we were talking about, unrestricted, no strings attached, or they used to have temporarily restricted and permanently restricted. And so for all of my accountants out there, not to overwhelm with a lot of accounting speak, but essentially, generally accepted accounting principles, FASB, decided to merge, essentially, for presentation purposes, the temporarily restricted, which basically means, to your point, Trish, restricted for a purpose or restricted for a period of time, right? I'm going to give you a gift to use for 2024, or I'm going to you use for anything you want, but you have to spend it in 2024, or I'm going to give you a gift just for your, job placement program or something. I'm making something up, right? While you should still track those restrictions internally so that you understand, to your point, Trish, when those are released or when those restrictions expire. Sometimes, in every case, it's when the money is spent and the restrictions are spent. The money is spent in either the purpose or the time in which the restrictions were placed. So it's good for you as an accountant or for leadership of an organization to understand the nature of all those restrictions so that they're properly releasing those funds from those restrictions. But just know that while the outside world looks at it differently and the financial reports use different terminology, I personally have not really changed my way of tracking or understanding how these net assets work. And so some organizations will have just a couple of these restrictions, and some organizations, I noticed there was a couple folks on here from religious organizations. Religious organizations are notorious for their funds. They love their funds, and educational entities as well. They love their funds.
Makes sense.
All the special offerings, all of the memorial funds and this fund and that fund. And so it's really important to kind of understand the nature of all of those and when you can actually spend those and for what purpose. Sometimes organizations find themselves in situations where they actually spent the dollars. I'll give you an example. I had a church I worked with, and they had like a flower fund where people donate flowers for, think about Easter or Christmas celebration, something like this, right?
That's beautiful.
Well, they, yes. I mean, if you're going to spend restrict money, flowers is the perfect, thing.
Yeah.
Flowers are lovely. So, the church would, for example, spend money on the flowers, but if they didn't tag it, we'll give you an illustration here in just a second in our case study. If they did not tag it to the flower fund, when they ran a report and said, how much do we have left in the flower fund? Well, it doesn't mean the organization didn't spend the money. They just didn't tag it. They didn't keep track of it, So arguably they should have used fund dollars for that, but they probably end up using their general donation dollars for those flower purchases. So
Right.
Shall we go ahead and dive into our case study?
Let's do it. Let's put some of this theory to good use. So we are going to go through a little case study and see if we can, put all that concrete or all of that theory into concrete knowledge. So let's break this down with a real life example, right? So let's say you are a nonprofit that is launching a fundraising campaign to buy medical equipment for different humanitarian groups in Ukraine, right? There are a few steps to follow after the funds have come in, and Tasha's going to break them down for us. And let's get started. So what is step one? Step one is to record the donation, correct?
Yep. So these are the different dimensions I'm talking about. And Trish, I know there's a couple questions in the queue that I might kind of try to tackle here a little bit.
Sure.
Or I'll kind of allude to it. There's a question on here about QuickBooks, and can we do that on here? But these are the different dimensions I'm talking about. So the different dimensions in the way that the accounting world or the accounting databases typically work. Your account, so that's the type of revenue or expense we're talking about here. So that's one dimension. Typically, you would also maybe have a department. If you have a department, like I was talking about earlier, with like programmatic versus fundraising versus general administrative, maybe you have a sub department. Maybe under your programming, you have like a job placement, and you have a homeless shelter, and you have a food pantry or something, right? So those could be different departments. So that would be another dimension that you can track and pull reports on within an accounting system. And then the last dimension, which we call third dimension accounting here at the Charity CFO, is this function of like the fund, right? So on the far right-hand side. And just, if as long as you're utilizing that third dimension, your fund, field within your accounting system, whether it's in the Springly system or some other system, you should be able to pull reports to tell you what the activity is in that particular fund, right? In the same way you could run a report to see what's all the activity in the account of revenue donation. You could run a report to see what's all the activity in programmatic department, for example. And if set up correctly, your accounting system should also be able to run activity by fund. But it's a little more nuts and bolts about how this is all set up and what all these different labels mean. Debits and credits is essentially accounting speak for us non-accountants. It doesn't really matter. But what this is really illustrating is that, hey, we took money, $10,500, and we deposited into our bank account. And anything in accounting must equal. So it's saying, hey, we put it in the bank account, and where did we record it on our profit and loss or our statement of activities? That's going to go to the revenue line item. So the credit, you can kind of ignore the debits and credit jargon for the non-accountants, but just note, hey, we earmarked it to the Ukraine fund, and we are applying that to the revenue donation, like revenue line item. That's essentially what this is saying. But the biggest takeaway here is that if you want to do fund accounting, you have to build that third dimension, which is that fund column to the far right-hand side.
Excellent. Step two. So would be to record any purchases of that you've used using that fund. So register your expenses and allocate it to the same fund, correct?
Exactly. Yep, exactly. Right. So this is where things get a little trickier from a workflow standpoint. The key is, as an organization, you could spend the money, certainly, but if the fund designation is not communicated to your accountant, let's say the accountant did not do the purchasing, say it's program manager. I get this all the time. I'm in the throes. I mentioned that report that I owe for the funder. I have two different clients. It's the same funder I have to get. And I was like, oh my God, I'm going back and trying to find all of the different expenses to be applied to this fund. So this is where, from more of an operational standpoint, really developing a good workflow and culture for your team to understand when they spend money, kind of what pot, figuratively speaking, is that coming from, and to be able to communicate that to your accountant so that your accountant could designate it to the appropriate fund. So in this case, we decided to buy the equipment as we promised for $2,500. Maybe it's one of many pieces that were in our budget. So in the same way, your account, that's one dimension. You tag it to the account called equipment. Again, in this particular example, we did not include any sort of like departments, but typically if it's going to be for a program or fundraising, if you want to add that dimension to your accounting system, you can do that. But most importantly, since we're talking about fund accounting, you could tag it to the Ukraine fund so that you can run a report and show. And then of course, the second line item there with the bank account, it just shows that it got taken out of the general checking account. So you could see that you can use one bank account for all of this activity, but with that third dimension, the fund column, you could earmark all of these different expenses and all these different income, and you can pull reports to show you what is the actual activity, even though it's all filtering through one physical bank account, if that makes sense.
Right.
So
it's basically about really staying on top of organization, is from what I understand, is that being organized here and kind of being almost religious about it is going to be a great way to keep yourself organized and have fluidify that. Is that a word? Yeah. Fluidify, or
that sounds like a great word if it's not.
Thank you. See, that communication between, let's say, the person who's making the purchases and anyone who's doing any accounting, whether it's the treasurer, the finance committee, or your accountant.
Yep, exactly.
All right. So, pop quiz to keep you on your toes. I think it's time for a little pop quiz. See who's been paying attention. So, write your guess in the chat. But how much was left in the fund after the medical equipment was purchased? The starting amount was $10,500. Okay, we got something coming in. All right. Yes, you guys are correct. $8K. So $8,000 are left for the funds. And so it begs the question, what do we do with the money left over? What do we do with it? There's $8,000 left to spend. What do we do with it? So what are our options, Tasha?
Well, this is where things get a little complicated. I think it just depends. In this particular example, this had donor restrictions. So we will essentially carry it over. Essentially, let's say that the gift was specifically for, it didn't have a specific period of time. It's just, hey, we want to support you through medical equipment, and we don't really care when it gets spent. There's no major timeline on it. We will carry that forward, essentially, and kind of keep it in our mind and kind of keep track through our fund accounting. As we continue to spend those dollars down, we will exhaust that over time. And we kind of carry that into next year, if you will, and keep that in mind that, hey, if we are going to buy equipment for this particular program, tag to that. Now, in a different situation, if we did not have any sort of donor restrictions on any dollars we spent, it just goes into kind of the general fund, and we should spend it as we need to, as we talked about, and we don't really do anything with it. We don't really need to track it. Every single dollar that comes in, it gets deposited. Only those dollars that we're really tracking by the donor restrictions we want to keep track of. So carrying it forward is really, I think, again, it's the biggest source of confusion for those that are all kind of involved in the financial management of a nonprofit and understanding, okay, Tasha, we had this money last year. We are spending it this year. Why is that money that we're spending this year not showing up on my revenue section of my budget? Well, as I've kind of alluded to, and for the purposes of just being repetitive to really hope that this makes sense, because it's savings of money, it's not income. So I was kind of giving this example the other day. Say you want to buy a house, and it's going to take you a few years. Especially in this market, right? It's going to take you a few years to save. And so, you are earning money every year, and you're going to save for a long-term purchase. It's going to be pretty significant. There's going to be a big cash outlay, a few years down the road that's going to really hurt the bank account. So you continue to accumulate the money year after year. You build up your bank account, knowing there's going to be a point in time where you're going to spend that money. So fast forward, and that year where you decide to make the home purchase, you are going to spend out of your savings account for the down payment on your house, perhaps, right? That does not mean that you earned that money that year just because you spent it, right? You just spent it. You didn't earn it. You earned it in years past. You spent it in that particular year. And so I kind of try to put technical accounting speak in the way of kind of personal finance. So, I think how sometimes nonprofits think about it, or want to see it anyway. Hey, we spent it this year, so it should show up on my W-2. Like, no, that's not, you earned it last year. It should have been your W-2 last year, right? It should have been last year's tax returns last year. This year, you're just spending it. And so that's the biggest source of confusion, I think, for leaders of nonprofits to say, hey, I've made this commitment to my funders. I have to spend this $50,000. He said, but that $50,000 isn't in your budget this year. Well, right, but I collected the money last year. The income was there last year. It's sitting in the bank account. I need to spend it. Well, CEO of a nonprofit, your budget doesn't balance now because you're trying to spend $50,000 and you don't have revenue to match it this year. And everyone just sitting around frustrated, like, but I received the money, I need to spend it. But you don't have it in your budget. Your budget's not balanced. We have to have a balanced budget, all these sorts of things. So the bad news is I can't really solve that for you. I don't make the accounting rules. I just, kind of interpret it and try to help other people understand them. But I think the good news is helping to educate and inform your board and others within your organization, maybe even your funders, on kind of understanding if you are an organization that tends to have these restricted funds that you accumulate. And this happens a lot for my clients. I get big gifts at the end of the year in December. Remember I said that the accounting rules say we have to record them when they're promised or when they're collected. We get so many gifts at the end of one year that we will spend that the rest of the year. And that creates a bit of a mismatch with revenues and expenses. But Tasha, the world tells me that my revenues and my expenses should match. And that's the way of the accounting. Yes, except in the nonprofit world. I don't know. I don't make the rules. Right. So unfortunately, that is a big source of confusion for a lot of individuals running organizations. So
I think letting go of that idea, that expectation of that these two things have to match, otherwise we're doing it quote unquote wrong, is like the first step into understanding fund accounting and nonprofit life in general, is that things rarely work out, from black and white revenue to expenses that are 0 to 0. I think letting go of that expectation and is a big first step forward.
And I will say what I do in this case, and I have some more practical considerations here on the next slide, but before we move on to that, what I do in those cases, especially when we have very big gifts that carry over year, what I typically do is I have the income I actually believe. Okay, let me take a step back. There's a budget I put together. Most of my clients get audited, right? So I have to explain in detail to the finance committee, this is an operational budget. This is our internal tool that we're going to use to make sure that we don't overspend the resources that we have available for the operations we're going into. It's not generally accepted accounting principles. It's not, going to match the audit report at the end of the year. It's not going to match the tax return. It's simply, these are the resources we've earmarked for operations this year, and this is how we're going to spend it. Almost think of it as like a cash basis, kind of like like an assumption of cash flows over the year, right? What money's coming in and what money's going out, sort of thing. Right. And then, and I explained to them that your audit might look differently and likely will look differently. And so we just have that understanding at the beginning of the year. So I just want to lay that groundwork first, and I'll explain what I do. So if I have clients that have large gifts, I gave you the example where we spent $545,000, I think the example was, but we only brought in $250,000 of restricted gifts. Well, obviously that means $293,000 in that year we carried over from last year. So what I do in my budget, I say, this is how much we're going to fundraise this year to actually use for this year's operations. This is how much we're going to earn in program revenue. This is where we might get some endowment earnings released, right? So we're not even really earning the revenue from the endowment. We're just pulling money down from the endowment. We're spending money out of our savings account. And also, this is our spending down of money we accumulated last year. It's not a real revenue number, right? It's not real because we can't count revenue again, but it's just a visual and understanding, hey, we are going to balance our budget by spending down money last year. And we're going to show you this line item that's like a pseudo revenue account, essentially, just to provide some clarity, a visual, and some understanding and drive the conversation from the finance committee where I can show them, you brought this money in last year, we brought this money in last year, but we have to commit to spending it. And when they see that all of the sources of revenue, all the sources of money, then balance the ways in which we're going to spend that money, there's much more comfort there. But then I try to draw the connection between operationally how we're going to operate, from a budget perspective versus what is actually going to show up on our audit report. And sometimes that audit report might show that we made a loss or we operated at a loss, but that's because we had to spend so much money this year for what we collected last year. So it's confusing, but that's how I do it. So.
In the interest of time, I'm going to kind of speed through these last slides just because we do have, we do want to answer some questions before we obviously go. We don't want to keep you guys too long. So Tasha, explain to us how you guys can track and communicate all of this to your board and to your finance committee in an easy kind of way.
Yeah, I kind of explained how I communicate to the board, but biggest takeaway is if you are a leader of a nonprofit, if you're an accountant of a nonprofit and you've not implemented fund accounting, or it's not done automatically by way of your system, as we've kind of described today, develop an accounting database that allows for this. And to answer some of these brief questions, substantially every accounting system, including QuickBooks, has a workaround to accommodate that. You're looking for another dimension. Somebody asked, what is that classification? It's really just a label. It's a tag, if you will. It's not really a revenues or expenses, or it's just a tag, if you kind of think of it that way. So substantially every accounting system, including some of those lower cost points, you don't have to go spend $40,000 for an implementation of, this incredibly overly complex accounting system to get this. We use very out of the box systems to track fund accounting. So if you've not built a database that allows for that, just ask your question, or ask your software developer, or whoever the company is, or do some research and figuring out, is there another dimension you can add? And usually the answer is always yes. That dimension could be by customer, sub-customer, it could be by program, it could be by location, it could be all those sorts of things, and you can label them accordingly. And if you're an accountant and you don't know how to do this, seek out and get some training on how to do that. Or if you're not an accountant, if you're a leader of a nonprofit, encourage your accountant, or find an accountant that does understand how to do all of this. And then most importantly, set the tone from the top that people understand what those restrictions are, and they're communicating to the accountant what those restrictions are and how they're spending those dollars so it can get captured in a meaningful way.
Absolutely. And a shameless plug, of course, you could always just use Springly to help automate your fund accounting and make it easy from the get-go. Exactly. Sorry, I had to. Shameless plug.
Yes. Well, Springly does that. So.
And we have a nonprofit CPA stamp of approval. So there you go. So questions, comments, concerns. We were going to get into your questions. I know, Tasha, you've already done a great job about answering a few. So we're going to open the questions tab. And just before we do that, a quick summary of all the 4 points that we want to remember is that, the fund accounting is a sort of standard for nonprofits that it promotes accountability and transparency and keeps you guys organized internally, externally. And the core of it all boils down to, managing those assets with or without donor restrictions. Mm-hmm. So it sounds complicated, but you guys are 100% capable of doing it and doing it really, really well. So we are here to help if need be. And how can we do that? So you are welcome to visit springly.org or thecharitycfo.com. Obviously, we do different things. We are highly complementary to each other, and we'd love to help you both in any way that we can. So obviously, we are a software provider, Springly, and we are here to help you with things like CRM communication, a full accounting suite for people who have accounting experience or none at all. Again, I am not an accountant, and if I can use it, anyone can use it. And of course, Tasha and her team are wonderful people to get in touch with for any of your accounting needs. And Tasha, you can probably pitch more about that.
Yeah, we'll have some more information about how to get in touch with me here, I think, on the next slide.
Yep, on the next slide. Last thing is that we have a Springly started a new newsletter called Spring Into Step, and it's sent every week on Monday, either between 7:30 or 8 a.m., depending on when I've had my coffee. And you can subscribe. I will put a link here in the chat in just a bit, and it is sent every morning at every Wednesday, and it's full of tips and tricks, including accounting tips to help grow your nonprofit. Outside of that, we did promise a little bit a resource that we've collaborated on together earlier, and this is it. I will also send you guys a link here in the chat in a bit. But Tasha and I have collaborated on creating a full ebook on a free full ebook on the basics of nonprofit accounting for the first of 3 volumes. It basically breaks down everything you need to understand the basics of nonprofit accounting, including fund accounting as well. This is for people who have no idea, who have no accounting experience whatsoever, and who really need a basic understanding of, okay, I'm starting my nonprofit. What do I need to know? How do I communicate with my board? How am I going to either hire a treasurer or become our own treasurer? So I'll send the link here in a bit, but it is for you for free, and we'd love to help you out if we can. That being said, Tasha, tell us about your gift.
I just thought there's so much to cover at any point, and there's so many different people with different backgrounds that just for participating, I'd love to offer just an hour of my time. Ask whatever questions you want, whether you are seemingly, some of the folks are kind of starting their own practices or starting to work with nonprofits and looking to move into that space. I'm happy to tell you all the lessons that I've learned. Or if you're an organization and you're looking for just advice on any particular topic, whether it's preparing for your first audit, best practices, setting up your accounting system, internal controls, talking a little bit more about either this particular topic or something else that you wish you could just pick a CPA's brain. I'd love to spend an hour of time with you, just you and I. And so in order to get put in the drawing for that, there is, I think on the next tab, maybe, there is a link that we can provide. I can probably go ahead and drop that in somewhere into the chat, and you all can just, can I go drop that in here, Trish?
Yep, I can do that, no problem.
Okay, yeah, you just go to that, fill that out, and we'll just pick a random drawing, and you know, I'm happy to offer any sort of advice I can.
Absolutely. Let me drop that into the chat 1 second. And that is it. So let's get to some questions while I drop the link in here 1 second. And I will do that for you. So pause 1 second. I'm making my way with the link. Here we go. Register. Okay, here we go. So questions. Let's look at this. So we have a question from Terry about the procedure for capitalizing and depreciating in-kind donations. For example, our volunteer fire department just received $25,000 in new equipment.
Yep.
I guess what I'm
that's a technical accounting question here, so I don't want to bore all of you, all the non-accountants with that detail. But Terry, you would just treat that like any other fixed asset, whatever the capitalization threshold is. Say it's, you know, $500, $2,500, whatever it might be. Just because it's donated does not mean you don't capitalize it, and it doesn't mean that you don't depreciate it. So treat it just like you would any other, even if you were to purchase it. But rather than saying like, you know, paying for it with cash, then you would show it as an in-kind contribution revenue line item. So
amazing. And Adam says, do you have any examples of multi-year financials that show the tracking of restricted funds over multiple periods?
So typically what you would see in any sort of internal financial statement or an external like audit or something like that, you would see kind of an example that I provided for 1 year, and it would show all the activity for 1 year. And then on the next page, you would see all the activity for the next period. That's typically how it's presented. However, I typically like to look at funds, especially that cross over multiple years. I like to create custom reports within my accounting system to say, hey, show me like all of the activity for this particular fund. And then I set up within the accounting system, you know, by year or by quarter or something like that. So it shows me kind of my activity and how I've spent those dollars over a period of time. But if you're talking about in total, how that's done, I've not seen a presentation like that before. It's usually just kind of comparative. So you have the same report for this year, you have the same report for last year, and you can just kind of flip back and forth to see, you know, what was spent, what was received, etc.
Amazing. We have a question from Damaris that is directed for Springly. Is that can we use only the accounting piece on Springly? Currently, that is not possible. You have to use our professional service, which I believe is starting at around $120 per month. And there's a reason for that specifically is because accounting is linked to many other things. So the whole idea of having an all-in-one software is that everything is linked together so that you take away all of those manual tasks that can be very, very I guess I have the French word in my head. I don't know why, but it is I guess they're kind of obnoxious tasks. And I'll give you an example is that if you were to only use the accounting piece, you wouldn't get the benefits of having a software like Springly. So for example, if you have a donation and someone is, let's say I want to donate to your organization, I donate through this donation page, and the donation is automatically recorded in your accounting software, the Springly's accounting software, automatically without you having to go in and tag it correctly, tag it as paid, use or tag what type of payment it was, like if it was credit card, cash, in-kind donations, etc. It's all done for you automatically, and that is the real time saver in using a software like Springly, which is why you can't use the accounting piece on its own. But there's more information about Springly in the chat, and of course you're welcome to reach out to me either on LinkedIn or by email or however you can get to me, and I'm happy to discuss that more with you in person. Maybe let's do one more. Let's see. Let's see if we can find a good one here. Let's see. Our Robin asks, are net assets on the P&L as income or on the balance sheet?
Total net assets are really mostly summarized. So the balance sheet is an accumulation of all activity that happened in that account since the beginning of time, right? And so typically net assets are put on the balance sheet. However, you might see like change in net assets. It's not spelled out. Like, so on the statement of activities, you might have revenues, expenses, and then, net income or loss. And then it'll have like beginning net assets. And then, your net income plus your beginning net assets equals your ending net assets. It's a very summarized, so I don't know if I would classify that as being listed on the income statement, but typically your net assets are going to be broken out either on a supplemental schedule, so a trusty Excel spreadsheet somewhere that your accountant might keep, or if you want to delineate those in separate funds on essentially your balance sheet or your statement of financial position, same financial report, different names. You typically would do that on your balance sheet. So
great. Well, thank you so much, Tasha. Thank you. Let's everyone give Tasha a wonderful round of applause, virtual round of applause for her brilliant brain and for being here with us today. Guys, I'm so sorry we're out of time. We're not going to get to all of your questions. I hope we got to the most important ones. And please give us your feedback here in the chat about if you like this format, what you think was great, what you think we could do better for next time, what other topics you'd like to see us either collaborate on, or what topics you'd like to hear from Springly. We did a webinar a few weeks ago about how to improve your nonprofit's online visibility, everything about marketing and communications. So let us know if you'd like us to address any other topics in this webinar format. Obviously, these are all for free, and we're here to be a resource for you guys because you're doing so much good in the world. We want to help those who help you, who help people. So please let us know what else you want to see from us. And thank you very much for your time. And you will receive the replay by email, either in a few short hours or tomorrow. I'm not sure when exactly it'll be sent out, but it will be sent out. And don't forget that Tasha is giving you guys 1 hour of her time. And the link is here in the chat if you want to apply for that. And you guys you'll pick the winner. Do you know when, Tasha?
I think it was on that slide. I think our team is hoping to get it, I think within a week or so.
Fantastic. Yeah. Great. And again, everyone who's on, I'm sorry, I cut you off.
That's okay.
Everyone who's on the replay is also welcome to apply. So again, you have like a week to apply, so don't hesitate to do that. And we will see you next time. Thank you so much.
All right. Bye, everyone.
Bye, everybody.